Again, my name is Paul Ngwasiri. I'm a real estate agent. I cover the Dallas-Fort Worth metropolitan market, even though I am licensed to write contracts in the whole state of Texas. It is again my pleasure to be here today to give you a few thoughts to consider when you look at buying your first home. Um, Again, the title of this video today is Home Buying 101, and we are looking at the process of home buying and what to consider in that process. Once again, thank you for joining. If you have not liked this show, if you have not shared, if you have not subscribed, please stop now and subscribe and leave a comment and let me know where you're watching from and if you have any questions as we go along. The home buying process and what you need to consider. First and foremost, everyone basically needs air, shelter, water, food, clothing, and so on. Those are basic needs of life. So what I'm talking about today is considering one of these, which is shelter, and that is a place to stay. And in as much as you can actually rent a place to stay, you can actually share a space with a friend, there is also a possibility to own a place in your own name. That is what I'll be talking about today: home buying, the process, and what you need to consider. I'm going to start first with the types of homes that exist out there. In the process of buying a home, you need to understand that there are two types. You either have new construction or pre-existing homes. And we are going to be looking at how the process of acquiring each of these looks like, right? For the home buying process, let's look at the benefits of owning a home. When you own a home in the United States, you build equity. So equity simply means you're going to get some financial portion of that house, that if you were to sell the house, that portion was going to go into your pocket. You either have that equity, assuming that the value of the house has not increased and you have paid down the principal, the part that you have paid is your equity, because then if you sell that house at some point, you're going to gain that money. But really, in the real sense of it, equity will mean that that house is appreciating in value. And so let's say you bought the house for 300,000 and then the value of real estate has increased in your neighborhood and that house is now worth 350,000. If you sell that house, you're going to be walking away with 50,000, everything being equal, right? Um, so when you own a house, you have that possibility of getting equity through the home's value appreciation or mortgage payoff, right? For those of us again in America, you also understand that you can do a tax deduction on the interest you've been paying on that house, right? When it's tax season and you own a house, when you file for your taxes, you can claim some portion of the taxes you have paid on your home. That's property taxes, right? When you own a house versus maybe being in an apartment, this house is yours. You can modify it, to be exactly what you want it to look like, right? So you can modify it inside. You can decide to break this wall and do something else in that room and all of that. You have that latitude to do that. But if you are renting or living with someone, you have to go with the space the way it is presented to you. You also, of course, have some level of privacy, right? You have some level of privacy. You can have, your party in your house and the neighbors are not going to be disturbed, versus if you're in an apartment, you have a party in your house, police will be called on you and stuff like that, right? That is one of the benefits, of owning a house. You can choose an area to buy a house based on, the schools that are in that area, right? Based on the schools that are in that area, you know that this area has good schools. So you decide that, I'm going to buy my house in this area because my children are going to have a good school to go to, and you also have that sense of maturity and accomplishment. It is a big milestone, a very big financial decision. to make. So once you get to that level, if you did the right thing at the right time and you get that house, then you're going to really like it. You're going to feel fulfilled and accomplished. Yeah. Some of the things to get ready for or to consider, when buying a house, is that you need to consider your credit score. So basically, there are there are two types of loan products. There are two loan products. You have the FHA, which is a Federal Housing Administration loan, and you also have the conventional loan, right? There is also the VA, which is reserved for veterans, and there's USDA, which is US United States Development, agricultural something, right? So, but the ones that are really prevalent will be FHA and conventional, which is what I want us to talk about. For FHA, you need at least a credit score of 580 an FHA loan, and for a conventional loan, you need at least 620 credit score to qualify for a conventional loan. Yeah. So these are the things you need to consider when you think of buying a house. Be like, okay, so what is my credit score? You know, and to talk more on these various types of loan products would be another video. But if you need to know what these are in detail, please you can leave that in the comments section, and I'm going to do a video to address that. You also have to consider your employment history, right? Basically, even though there is an exception to every rule, but the rule is that you need 2 years of your W-2. The reason they ask for 2 years is to, kind of track and see whether you are the kind of employee who can be steady in one job, right? So you need 2 years of your W-2. You also need some financial backing, right? So they need to see how much you make, and that how much you make has to be reflected by your bank account. So you're going to provide 2 months, so 60 days of your bank statement. You are equally going to provide 30 days pay stubs. So I'm going to explain this a little. So they're asking for 30 days pay stub because you need to be sure that at the time you are asking to loan money to buy or to borrow money to buy a house, you are currently still working a job that is going to be able to allow you to pay off that loan you're taking. Asking for 60 days of bank statements to make sure that you have enough funds in your account to cover your down payment and your closing costs, and also to make sure that that money in your account is not borrowed money. Like you ask your friend, hey, can you send me $10,000 so that I can use to qualify for this house and then I give you back later? Nope. So they're going to track for the past 2 months and see how money has been getting into your account and going out. So if you are planning to pick, you know, some lump sum contribution from friends or somewhere to put in your account, they are going to flag that money has to be in your account for at least 60 days to be considered yours. However, you can get gift funds from your friends, family. They will have to write. You will have to write a letter of explanation, explaining how you got that money, and the donor is also going to, write a letter, attesting that they have given you this money and are not expecting to get it back after you close on your loan. So these are some of the things that you need to know in this house buying process, right? Let's get back to the types of homes. So I said we have new construction homes. We also have pre-existing homes. These homes can further be broken down into single family detached. So it's a single family home that is standing on its own. It is not attached to another house, right? So but you can also have townhouses or condominiums. These ones are attached to each other, but they are separate units, separate doors that are attached. They share the same wall, in other words. And then you also have duplexes. Like you have one house that has two sides of the same house. So basically, if you buy that kind of a house, you might live in one side, and then you put the other side, for rent. Most people who want to do investment in real estate look for duplexes so that they can live in one and then put the other one out there in the market, and then maybe use the rent payment from that one to actually pay off the entire mortgage, or at least add just a portion to pay off the entire mortgage, right? So those are the type of houses that are in the market, and you will choose one of them based on your need, based on your affordability, and based on your location, right? So these are the type of houses that are available out there in the market. Now let's look at the process uh, of buying a pre-existing home, right? So the first thing is that you need to obtain a pre-approval letter from a mortgage lender, right? So generally you can contact your bank and say, hey, I want to buy a house, and so I need a loan. They are going to send you to the mortgage department of your bank. They're going to ask for these documents we mentioned earlier: W-2, bank statements, pay stubs, and stuff like that. Check, run your credit, and determine your score. And then based on that, they are going to make a decision and let you know through a letter they call the pre-approval letter. They'll let you know through that letter how much a bank is willing to lend you to buy your house. So once you get that amount, you're going to get it with a real estate agent like myself, or a real estate agent of your choice. And the real estate agent is going to, based on your needs, help you locate pre-existing homes through the MLS, which is a site or a system where real estate agents have access to see the houses that are listed in the market for sale. So, but you buyers don't have access to that, so you are going to contact a real estate agent like me, anyone else that you know around where you are. They're going to, narrow down the search for you, the number of bedrooms you want, the cities you prefer, the price point you want, and all of that. We're going to filter that and then send you those properties. You will take a look at them, see the pictures. If you feel attracted to anyone, you highlight that, and then we make a plan, take you out there, open the door, you go in, take a look, and see all of that. If that is the house that you think you will go with, then your real estate agent again is going to help you write an offer letter to the landlord or the seller. The seller is going to, among other applications that come in, if you are selected, then we are going to go into escrow. So we're going to open an escrow, and I have I have another video that I'm going to link here that explains what an escrow account is, right? So if you don't understand what escrow is, I'm going to link that video and you're going to see it. You're going to watch it and know what an escrow account is, right? So yeah, so once your offer is accepted, we are going to go to escrow. At that point, we are going to conduct inspection on the home. Once everything is conducted, appraisal comes back and all of that, and the price of the house is firmed up, like closing costs and all of that, then the financing is going to take place, and we are going to close on the house, typically 30 to 45 days between that time. But when I bought my own house, I closed within 21 days. So yeah, the process goes like that for a pre-existing home, right? After that, there's also something that they call option money, right? Option money. So option money is some little amount of money, maybe $200, $150, whatever, that you as the buyer give that money to the seller. But remember that at this time your escrow is already open, and every money that you pay in this process goes to the escrow account. It doesn't go to any individual. So the title company is going to open an escrow account on your behalf. And so even this option money, you are not sending it to some individual, you're sending it to your escrow account. Now, what this option money does is that, take note of the word option. It gives you the option to back out of that contract after it has been accepted, right? It gives you the option to back out. If you do not pay option money, that means you don't have the option to back out of that contract. So, but once you give that option money, you now get an inspector to inspect your home, and do all the checks and balances. If they find something that you feel like, what, based on this, I am not willing to move forward with this transaction, you're going to lose that $100, 150, 200, whatever it was that you paid as option money. You're going to lose it, but then you have the right to back out of the contract. If you didn't do that, no matter what they find, you're going to stay bound to that contract. So it is very important to pay your option money. Yeah, these contracts are very serious. There is also what we call what? The earnest money. So earnest money is a sum of money, usually 1% of the loan amount, that you give to the seller. Again, you send it to the title company. That will be in your escrow account. And that amount of money just shows your commitment to the seller that, hey, I am committed in buying this house. So if anything comes up and I decide not to continue in this process, then you can keep this money. But I'm giving you this money to assure you that take this house out of the market because I will be buying this house. Okay, but if you end up not buying that house, except that at some point you didn't qualify for the house anymore, then you're going to lose that money. But if you just decide, you know what, I don't feel like buying a house anymore, so I'm going to let it go, after you have told the seller to take the house out away from the market because you are sure that you're going to buy it, that seller has probably lost clients between that time, so they are going to keep that 1% that you deposited. But be assured that if you end up buying the house, then both the earnest money and the option fee is going to be credited back to you. So that is a good part of it, right? It's going to be credited back to you. So it's still going to be your money, provided you go through with the transaction. Now, again, please, if you have not subscribed yet, please go ahead and subscribe, like, and comment. Thank you. Now let's look at a process of buying a new construction. A new construction could be, you could just choose a lot and choose the floor plan that you want built for you, and it is built. Okay, but you can also have a new construction that is already constructed, but no one has lived there before. Okay, so builders build what they call inventory homes. So they just build the homes and put them there in the market for sale. That is still considered new construction. It is not considered pre-existing. Okay, so here's the process. Again, you will have to obtain a pre-approval letter. Another thing I want to tell you about, excuse me, one thing I want to tell you about new construction is that in most cases, the builders have their own preferred lenders they work with. So if you go to a new construction company, they can at the same time walk you through the process of pre-approval with their preferred lender. And most of them have incentives if you decide to use their preferred lender, right? So some of them might be like, okay, if you use our preferred lender, we're going to offer you maybe $6,000 towards your closing cost. I have worked with builders that offer up to $20,000 that you can apply towards your closing cost. Plus, some of them give you like, a gift card of about $3,000 to buy furniture, once you get into the house and stuff like that. However, you are not compelled to use the builder's preferred lender. You can use your bank, you can, search an ordinary, mortgage lenders around town. You can work with your real estate agent to recommend one for you if you don't know how to go about this, yeah. So, but once you get that pre-approval letter, your realtor again will assist you in finding, what is best for you according to your needs and available in the market at that time. So your real estate agent is going to help you search that based on your criteria. But remember that before you get to your real estate agent, you must already have a pre-approval letter, because that is the first step. We can't look for homes for you when we don't know how much you qualify for. So we always need you to show us your pre-approval letter, so that based on that, we are going to look for homes that you can afford. Otherwise, I will waste your time, you will waste my time, and we will go around and look at those very big houses, and at the end of the day, you don't qualify for them. So Yes, always, always, always make sure that you have your pre-approval letter before you get out there with your real estate agent. And then once we pin down what you want and what you need, you're equally going to pay your earnest money, which is the same thing I explained. But in this case, instead of the real estate agent to prepare the contract, the builder is going to prepare the contract, and I will just guide you. When I say I, like your real estate agent will just guide you on what to do in signing contract, right? Then if in your situation you just picked a fresh lot, then you will have to wait for that property to be built. Usually takes like 8 to 12 months. I have done some for 16 months during COVID. Yeah, but usually should be between 8 to 12 months. They will build that house for you, and then we will go to the closing table, close on the house, and you get the keys. But if you went for an inventory home, that means a home that was already built and ready to sell, and you liked it, the moment you sign that contract, within 21 to 30 days, we should close on that house and you get the keys to your property. Okay. In this home buying process, my last week video, I was targeting the subject of avoiding the mortgage trap. Like I said in that video, which I'm going to also link it here, you don't need to have a six-figure salary in America to be able to own a home, right? You don't need to. You can get a home that is affordable to you based on how much you make. The challenge we have is that we want to buy a home that we don't qualify for, or a home that we don't even need. So some of the things that I want you to consider, when you're in this process of buying your home, or when you start thinking about buying a home, is that first you need to know your affordability, right? You need to know how much of a house you can afford. Not everybody can afford a house of $1 million. Not everybody can afford a house for $500,000. Not everybody can afford a house for 600,000, 700,000, 400,000. So you need to know what you can afford. That will be based on your income. Okay. How much do I make? How much do I spend per month? If I add a mortgage payment to my already existing expenditure, if I added $2,000 per month, is my salary going to sustain that? Okay. Yeah. So you need to consider your affordability. You need to consider that when you buy a house, what you pay for that house is not only the price that was tacked on it, but you need to consider that once you buy a house, there is property taxes that kick in, there is homeowners insurance that kicks in. If you paid less than 20% for your down payment, then you will also have to pay what they call a private mortgage insurance. And what that does is that that insurance is not protecting you, it is protecting the the person who is lending you that money, the bank or whoever, right? It's protecting them in the event that that house is foreclosed. They are not going to lose. It is not protecting you. So if you are able to save up to 20,000, not 20,000, you're able to save up to 20% of whatever amount of a house you want to buy, and you put that in your down payment, you're going to avoid this insurance. Okay. So consider all of those things. Consider maintenance cost. That when you own a house, you need to start, setting some money aside for maintenance. The AC is not working, you need to fix it. Oh, the roof is leaking, you need to fix it. And all of that, you need to take care of the lawn. If you are living in an area where there is homeowners association, you need to consider the homeowners association fee, and all of that. You need to consider all of that and then ask yourself whether you are able to afford this. All right. That is the first thing. The next thing I also want you to keep in mind in this process of home buying is that you need to consider your pre approval amount. So, like I said earlier, you need to make sure that you have seen a loan officer and they have given you an amount based on your financial situation and other things around you. They have given you an amount that a lender is willing to give to you to take buy your house with. Okay. Because now when you have that amount, it now tells you how much of a loan you can qualify for. Okay, and then based on that, it gives you an idea what type of a house you can buy. So you don't start going around looking at homes that you don't qualify for. Okay, we have already mentioned that you should consider your credit score. Just knowing that you need 580 for FHA and 620 for conventional is not enough. You need to know that for your credit score to stay to par, when you start the process of buying a home, number one, do not open any new credit lines, because you take new credit lines, they are going to run your credit, it's going to affect your credit. Okay, you have to also consider that you need to be making extra payments if you can to pay off your credit cards to reduce your amount of debt. So the more you pay off your credit card, the higher your credit score goes. Okay, those are some of the things that you do. And do not also close your credit cards. Don't close them, right? Don't close them. You can use, but make sure use and pay, use and pay. That shows that you are credible. Okay, so someone can trust you to loan you that money because you have a history of using credit and paying. Okay, make sure that you keep your credit usage below 30%. That also shows that you are not your life is not dependent on credit, if that makes sense. Okay, also understand that there is something they call closing cost. Closing cost sometimes between 1 to 2% of the loan amount. So that is the cost that they use to originate your loan, to set up your escrow account, which again, I said there's a video I'm going to link there on escrow account. You pay for appraiser fee, inspection, title insurance. There's a whole lot of things that you pay for in this process of home buying, and they put all of that money together and they call it closing cost. Okay, you need to consider that. So when they say a house is 300,000, it doesn't mean that it is just 300,000. There's a few costs that comes with all of that. So I also want you to know that when you buy your home, whether it is a pre-existing home or new construction, it is recommended that you get a professional inspector to come to that house. And your real estate agents like myself and others are not certified inspectors. We're not professionals. So we might look at the house and just see a few things that are not right, but there might be deeper things that we are not able to see with our naked eyes that a licensed inspector is able to uncover, right? Is able to uncover. So I want you to know that you need to get a professional inspector who is going to, uncover any hidden issues that are in that house for you to know, and for the builder or the seller to fix them, or you negotiate that with the seller or the builder to get those things in place before you end up signing that contract or closing on that house, right? So these are the few things that I had for us today on this Real Estate Thursday. It's a pleasure to be here with you. If you have any questions, I am open. The comment section is still alive and well. Go ahead and send those comments, ask those questions, and I will really be glad to answer them. Again, this is your agent, Paul Ngwasiri, here in the DFW area in Dallas, Texas. If you need to buy a house anytime, contact me. I will do my best to get you what you need, not just what you want. Again, thank you so much. Like, subscribe, comment, and share. Until next Thursday, have a wonderful week.